So the price is dropping and then boom, it hits our take profit. We had 4 different tools indicating that here we short the market. Entering into the trades is one of the most important parts in day trading. Does not matter how good your strategy is, if you cannot properly enter into the trades, you will always get stopped out. Sniper entries is not a complex concept once you understand how you should make them. In order to make a sniper entry, you need to use many different tools, which indicates potential entry point. So what tools do you need to use in order to make sniper entries, you ask? Well, basically you can use anything. You can use indicators, key market levels, market structure, Fibonacci retracement, or just price action in general. My name is Lucas, this is Magic Markets, and today I will show you how you can combine different tools in order to get a sniper entry. Today I will show you 3 different indicators that you can use in order to find perfect sniper entries, and the first one is Bollinger Bands. Bollinger Bands is a simple range indicator that you can find on any trading platform. Basically, it comes with 3 different lines, which is right here. This is the bottom range of the price, this is the top range, and this is the middle moving average. So everything is pretty simple. In order to use Bollinger Bands, you need to understand that when the price is at the top line, it means that it reached the top range of the price, and it is an indication that now the price will soon reverse. The next indicator that can be really useful for you to find a perfect sniper entry can be exponential moving average. Again, really common indicator used among many traders, and the price respects this indicator. We have exponential moving average with an input of 50, and we will use it to find support and resistance levels. If we look at the price, we will see that this exponential moving average line acts as a support and resistance levels. So boom, as you can see here, we have a perfect resistance levels that you can use with other tools to indicate that, for example, here the price will continue on its way downwards, and here we have a support level again where you can find support. So basically this exponential moving average line can be a great use for you when you need to find support and resistance levels. And the last indicator that we will shortly talk about today is MACD, moving average convergence divergence. MACD is an indicator used to find a perfect entry point. As you can see over here, if we look at these 2 lines, they usually cross. And this cross right here indicates that you need to open a position, and if the cross happens from top to bottom, that means that you need to open a short position. And if we look at the price, we can see that these highs and lows correlates with the same MACD highs and lows of these lines right here. As you can see here, we have a high, and therefore we have a high on MACD. So if we have a cross at this particular point right here, that means that somewhere over here it is a strong indication for us to open a short position. So MACD is really simple to understand, and you can combine it with any different tool, and you can even combine a few indicators at once to find that perfect entry. Indicators are a great tool in day trading because they provide you with a lot of important information. Now, support and resistance levels is probably the most common tool used by traders, and I can really understand why. I personally use it all the time, and it is a great tool that the price respects and you can use basically for anything. Here on the price, we can instantly see some support and resistance levels. Boom, as you can see here, we had a support level, then the price broke through it, and then we have a resistance levels. Boom, other support is over here. As you can see, price was unable to break it, and if we want, we can mark even more. We have a resistance and support level over here. You can call it supplier demand or key market levels, it doesn't matter, they all mean the same thing. Support and resistance levels can be a great tool to find perfect entries. As you can see here, the price was going up, and then boom, it hit resistance, and then it went downwards. Then the price hit support level and then went upwards. So as you can see here on these particular points, we can find a great entries, and if we can combine them with anything else, the probabilities will definitely be on your side. You can even use Fibonacci retracement tool, which is also a great way to find the perfect sniper entries. Fibonacci retracement is a little bit subjective. Some traders believe in it, some do not, but I personally believe if enough traders are using it, you can definitely apply it to your own trading to find a perfect sniper entry. Fibonacci retracement is pretty simple concept to understand. Basically what you need is a Fibonacci tool, and if the price is going downwards, basically we have a downtrend, then you find a high of the price, like for example over here or here, and then you mark it to the low point of the price, and basically this point over here will be your potential resistance, basically where the price will retrace, so you can enter into the market. And if we zoom in, here would be the point where you could potentially combine it with other tools and basically open a short position right here. And the last tool that we will discuss today is market structure. Market structure is really powerful and it's really simple to apply. In order to use market structure tool, you only need to identify the trend properly. So basically if the price is climbing downwards, it's making lower highs, lower lows, lower highs, lower lows. That means that you are in a downtrend, and that means that you should look for an entry downwards. And basically just what you need to understand is basically where you can find a retracement, where the retracement of the market structure will end, and where you could potentially open a position into continuation of the price. Now when we combine everything together, we have something like this. I have used Bollinger Bands indicator. Here, as you can see, the price reached its top range, again indication that we should open a sell position. Then we have a support and resistance levels. As you can see here, this level was a support level, then resistance and resistance again, so really strong and well respected level. Also here I have a Fibonacci drawn from the top to bottom of the price, and this is the golden level of 0.618. The trend is downwards, the market is moving downwards. So we have 4 different tools indicating that we should short the market, and this is where we open our position like this. So the price is dropping and then boom, it hits our take profit. We had 4 different tools indicating that here we short the market, and as you can see, the price almost instantly hit our take profit. So that's it for this episode. Hopefully you guys enjoyed it. Hopefully you guys learned a lot. Leave that like button, subscribe if you want to see more of this in the future, and see you in the next one.